Hi, everyone. Welcome to the Entertainment Partners New Media Residuals webinar. My name is Melania Jujian, and I'm the Staff Residuals Trainer here at EP. With me here today is Executive Vice President of Residuals, Anthony De La Rosa.
Thank you, Melania. Today we'll be covering new media residuals and how to forecast for them. Please note we'll only be covering like the general high-level formulas because in residuals you can go many different directions very quickly. A little bit about my experiences. I've been in residuals for about 20 years, and I worked my previous employer at Lionsgate. I had a specific focus on new media residuals as well as forecasting. So can't wait to dive into it with you.
So we'll dive into new media residuals in just a moment, but I do want to mention that we will have a Q&A session at the end of the presentation. So if you do have any questions throughout the presentation, feel free to use the Q&A button on your screen and submit them, and we will address them towards the end. So Anthony, to start off, what are some of the key differences between new media products versus other TV products?
Yeah, TV is constantly evolving. And so essentially the old residual formulas were focused on the consumption of residuals at that time. So essentially back in the day, especially when I was a young kid, everyone gathered around the couch, sat around the TV, and actually watched a live linear feed onto a set-top box. But now over the past couple of decades, the consumption of media has evolved. First, it went to computers, then it went to phones. And so actually having content be able to deliver to your phone has actually changed the landscape tremendously. So now people can watch and consume content anywhere, any place, 24 hours a day on the planet. So the residual rules have changed from a run-based calculation to more of a trying to gather as many eyeballs and see what the yearly rate is for a year, or actually to assess a license fee and a monetary value.
So word on the street is there's more than one type of new media formula. So can we talk about those different elements and what they entail?
Yes, definitely. So really we'll be talking about this more, but the budget level dictates which formula. And so if you have a low budget, there's a low budget residual formula, as well as a free window residual formula, as well as a high budget SVOD formula or streaming on demand. Brandon, can we go to the next slide? So within these different formulas, there's various different variables. And so the one key variable that you're going to need to know is budget. So budget is the king of all. And then on top of that, you're going to need to know the principal photography date, as well as the license fee. And then for the high budget SVOD formula, you're going to need to know the platform, the subscriber count, as well as the guild applicable minimums.
So if we can dive a little deeper into low budget now.
Yes, so low budget is going to be everyone's friend. Essentially, if you have a program that's under $25,000 a minute, you actually own no residuals on the platform that's streaming on. But please note though, if you do plan on releasing this content to other avenues, like such as pay TV, basic cable, or EST, you're actually going to pay the regular supplemental market rates. So $25,000 a minute, what that really means is on a half-hour show, if your budget's under $750,000, you owe nothing. And for an hour show, it's $1.5 million.
So moving on to free window.
Yes. So free window, now here things get a little more complicated because now basically the guilds and the studios have negotiated that if something's not a high budget, but not a low budget, you still owe something. And so the spirit of this rule really was to give clients about 50% of the fair market value. So what this equates to is they're getting 6 months of content for free. And so essentially the way the rules were written is that for every dollar you receive after the first 26 weeks of exploitation, you actually pay a percentage of the license fee. And so these percentages break down to 1.2% for SAG, 1.2% for DGA, 1.2% for WGA, 3.6% for SAG, and 5.4% for IATSE, and 1% for AFM. Now, please note, though, when they negotiated this rule, the guilds are really looking for a 50% allocation. So when you're forecasting, you want to use about 50%. And please note, though, if you're using anything under 50%, you could expect an audit or a guild claim.
Okay, so we talked about low budget, free window, and now I know high budget is the next popular one. So if we can talk about that a little bit.
Yes, so high budget is probably most of the forecasting and most where it takes the technical expertise. And so first and foremost, once again, we go back to budget. So budget's king and dictates all. So for about a 30-minute program, if your budget's above 1.3 million, you'll trigger the high budget SVOD formula, as well as for 60-minute, it's 2.5, and for anything over 66 minutes, it's $3 million. So on top of that, you actually have to understand. So Brandon, if we actually go to the next slide. So on top of that, you actually have to know what platform's being that's being aired on. So the platform dictates the actual subscriber rate factor. So essentially, when the guilds negotiated this formula, they want to give benefit to those smaller platforms versus those larger platforms. So essentially, if you have something on Netflix, you're going to be paying about a 50% markup in premium over over something that's on Hulu or Amazon. So if we can go to the next slide, we'll talk a little bit about the yearly rates. So essentially how this works is that for every year it's on the platform, you actually pay a yearly rate. And so it starts off at 35% for domestic, and it ends at 1.5% it flattens out 1.5% for year 13. Now, please note, residuals do go into perpetuity. So every year after year 13, the percentage stays flat at 1.5%. And note that we won't go too deep into this today, but there are percentages related to foreign exploitation.
Okay, so let's transition now into forecasting, specifically starting with low budget.
Yes. So as we said before, low budget is everyone's friend. So essentially, if you can figure out if it's under $25,000 a minute, that means you owe nothing on the network. And so essentially, what you want to do is you want to get your production budget, and you want to look at the whole aggregated total production budget and and divide that by how many minutes the content's going to be planned to have its length, and then see if it's under $25,000 a minute. Now, please note though, if some production budgets already include a residual line, so you want to exclude the residual line because residuals are not factored into the total production cost.
Alrighty, so moving forward to free window.
Yes. So free window, now you're not only going to know the budget and the production budget amount, but also you're going to need to know the contract, the actual license fee that the platform is paying you to air this content. Essentially, though, if we can go to the next slide, essentially you have to take the contracted amount and see what the license fee is, and then see what the payment terms are. Usually the payment terms are listed after the license fee amount. And essentially the way platforms like to pay, hypothetically, and generally in the industry speak, they give you a down payment of a certain percentage of the overall license fee, followed by incremental payments on a quarterly basis. So essentially at the 26-week marker, you could have a significant amount of that license fee already paid. But once again, like I said before, the guilds are kind of looking for a 50% allocation. That really was the spirit of the formula. So if you have anything that's under 50%, please note that the guilds will try to challenge you. So in forecasting, what I would usually do is just take the license fee, divide it by 50%, and then apply the appropriate guild percentages to that license fee.
Alrighty, so now let's move forward again to high budget SVOD.
Yes, so high budget SVOD, this is where things get complicated. You have lots of different variables. And so we're going to walk through this. We're probably going to spend most of the presentation on this. Please feel free to ask any questions because you can get lost very quickly. So we can move on to the next slide. We'll dive into the actual production budget. So essentially, if you're forecasting residuals and you basically need to pair up with the line producer, get the latest production budget and scan it. And what you're looking for is to see if the total production budget is above those high budget thresholds that we discussed. Then after that, if it does qualify, you want to go into the details, which can be found on the next slide. So as you're looking on the next slide, you'll see that the production budget is broken out to different areas. One is dealing with story, which usually has the writers. One, directors, obviously has the directors. So on this page, we'll be focusing on those line items. So in this sample production budget, you can see that this particular episode has a writer and storyteller play, and their initial compensation is about $39,000. And as you can see, the same for the director, who happens to be a loan-out in this case, has about a initial compensation of $47,000. Please note that that information is great and excellent, but those are not the guild minimums that you need to use. So the challenging part with residuals is there's not an always one-to-one correlation with the initial compensation. So you actually need to go into the guild agreement and find the applicable minimum. So on the slide, we actually have listed the minimums for both half-hour and hour shows for both WGA and DGA. So next slide, we'll move into SAG. So on this slide, you can see that there's a lot more SAG players and there's different categories, and we'll walk you through this process. So essentially, as you can see, the principal players have very large salaries, approximately of $60,000 each, over $60,000 each. And then you see the supporting cast, and finally you see the day players and weekly players. So please note the way the guilds negotiated these formulas was that they didn't want you paying these high initial compensations, and they didn't want the minimums to scale to the salary. So these minimums are a lot smaller than compared to WGA and DGA. So the other nuance that they applied is they actually applied a ceiling. So the amounts listed for both the series players and weekly players on this chart here are actually in the green box, are actually the guild minimum ceilings that you could pay up to. So basically no talent should go for a half-hour show should go above about $2,700, and no talent should go above about $3,800 for an hour show. Now please note though, for all talent that's under this amount, the scale will vary, and the scales include overtime and all that nuance. But for forecasting, you're really just trying to get an estimate. So you're just counting the specific players on the show and then adding up the scales appropriately. If we can go to the next slide, please. So now that we've gone through the guild minimums, we've gone through the platform rates and the yearly rates, this is where we combine it all together. So essentially what you want to do, and we're going to use an easy example with the latest rates from 2019, is we're going to take a day player. So for a day player, they're paid about $1,005 is their minimum for a day. Well, if you had something airing on Netflix, you would actually be triggering that additional 50%. So you take the $1,000 essentially, multiply it by 150%, which gets you to $1,500. And then you would say if you only want to air it on Netflix for 10 years, that's going to be, if you aggregated all the yearly amounts from year 1 to year 2, you'd actually come out to a residual rate of 182%. So if you took that $1,500 and multiply it by 182%, you come out to about $2,700. And that's how easy you can forecast. Now having said that, the way you want to break this down is you want to put this into a spreadsheet, and you actually want to pair it with your production budget. So in my experience, whenever I've given a forecast, they always want to see what's your source and what's your backup. And it's always great to have the production budget handy, because that lists whether it's WJ, whether it's DJ and SAG, and then what's the composition of cast. Because on certain shows I forecasted, I had up to 100 people for a 1-hour show. So it does get a little bit intense. But then the other thing I would want to remind you is that you please, on any forecast that you use, please include an amount for fringe. So this is basically an amount above and beyond the gross residual that you're forecasting that accounts for all pension, health and welfare, taxes, as well as handling fees.
Okay, well, thank you for that insightful information, Anthony. We're going to actually go ahead and switch over to our Q&A. And our first question is, could you do an estimate without a production budget?
Yes, you can. I mean, if you essentially got together the different variables, like, is this going to be a WJ show? Is this going to be a DGA show? And we're going to have about 10 actors, you can. But realistically, when you're doing these forecasts, actually the platforms are having you do this because they're going to reimburse you those residual amounts. So they're going to want something more substantial to base the forecast on. And that's where I always say, whatever schedule you're building, you want to have the production budget handy, so then you can have that as your solid backup.
Okay, great. So now, next question, do all the guilds have the same minimum effective dates?
Actually, no. So in the world of residuals, the minimums change based on a certain calendar month. So for WJ, it's actually May 2nd, and for DJ and SAG, it's July 1st. So please note, if you are starting productions in between these, that you could straddle the different minimums for the WJ or DJ and SAG respectively. But note, you are just forecasting, so the minimums usually go up about 3%, so it won't be too far off.
Okay, great. So we have a question from Sarah. How do you forecast fringes?
So that is complicated. For legality reasons, I don't want to give a specific rate, but usually what people do is they like to take the pension rate, which is anywhere between 14% to 17% these days, and also and use that as the fringe rate. The reason why you wouldn't add more for taxes is because you have loan outs. So certain people who are paid under loan outs don't trigger taxes, as well as Social Security and regular taxes. That all is just variable factors that you don't always encounter. So essentially, if you use, I would say, just the sweet spot between 15 and 20%, you should be good.
All right, great. So the next question, Vishal has a question of, can you go over that example again? How did you get to the 182%? So we're going to go back to the slide here so we can pull that up.
Yes.
Slide 7. Yes. There
Great.
you
Thanks,
go.
Brandon. So
Thank you.
essentially, how I got to 182%, I added the different yearly percentages from year 1 all the way to year 10. So as you can see, year 1 has 35%, year 2 has 30, followed by 30, and then there's multiple yearly rates with different percentages. So basically, I just aggregated all the percentages from year 1 to year 10, and that came out to 182. I do memorize some of the stuff because I've done a lot of forecasting.
Okay, great. So next question, where do we find the guild minimums?
Very good. So actually you find them in the guild agreements. So the guilds publish agreements every 3 years. And so essentially they are a little slow. So you can't get the hard copy book for probably about 3 years, which kind of makes them useless because the next contract's coming out. But if you go online to each of the different guild websites, whether it's sag.org, dj.org, or wj.org, they actually have a contract section, and they will have what's called so say for next year, when we have new guild negotiations under 2020, they'll have the 2020 MOA. And in that MOA, they will give you the new minimums. And so usually those minimums are listed under, it says high budget SVOD, and it'll say guild applicable minimums. And in the case of SAG, it's going to give you actually the ceilings that you'll use, because between that, you actually use the daily rate, which are basically paired with the regular television agreement minimums.
Okay, wonderful. So for the subscriber rate factors, when do those change?
Great question. So the subscriber rate factors do not fall into the trap of, oh my gosh, Hulu reported they have an increase of subscribers of 5 million in the last quarter. They're actually agreed on at July of every year. So essentially, so say in 2019, the guilds took a validation of how many subscribers each platform had. They agreed on what tier should belong, and now the next time it'll change won't be until 2020.
All right, wonderful. So we have a question. When looking at the license fee for cost plus deals, are the guilds expecting to see residuals paid on the cost plus the premium or just the premium?
Very good question, very technical question, and I do have experience from an audit perspective. They are actually looking at cost plus premium. And so this is where you would want to consult a labor relations attorney if you feel compelled to just use costs. But the spirit of the rule is all money received. So the money received is the spirit of they're paying you the cost plus the premium. But great question.
All right, keep them coming, guys. So now the next question, do you have to pay the high budget SVOD foreign formula?
Great. So you only have to pay that if it's released into a certain percentage of foreign markets. So we get too detailed in this presentation, but if someone does really have questions around that, I can answer that. But high level, if you do trigger a certain level of foreign markets, you actually pay a percentage of the domestic residual. So if we can go back to that slide for forecasting for high budget SVOD. So essentially the way the formula works, and it's kind of complicated how they did it. If you see that bottom line, there's the international rate, and it has 35%, and those percentages look very closely like domestic. Well, don't be fooled, because those percentages are really percentages of a residual. And so it's kind of hard when you're building a model out to say, hey, I'm going to calculate my residual first for domestic and then calculate my foreign second. It kind of creates some formula errors. And so what I've done and what I've listed on that bottom line is that if you actually multiply the international rate times the domestic rate, you get to the pure rate of what the guild applicable minimum is. And so I just want to say these percentages are not as sexy, but the reason why the guilds released the top line was because essentially they look larger. So it looked like the talent was getting more when they're really getting a smaller amount. So if you were to forecast, you would actually use that bottom line and multiply it by the guild minimum like we did before.
Alrighty, so the next question we have coming in is, why is the free window a 26-week period?
Great. So that's something that arbitrarily, so in the guild negotiations, the lawyers for the studios and the labor attorneys for the guilds get together in a room and they just hypothesize what would be fair market value. And so essentially they do go back to the studios and get some validation. But in those negotiations in, I believe, 2011, they felt that 26 weeks represented the period where they get most exposure or would be constituted like initial release. So when a title gets released, say on CBS on a network, that first release, most eyeballs are watching it. And then every time it repeats, the amount of eyeballs on it gets smaller. So in this case of new media residuals, they feel like the 6 months is that kind of initial window.
Okay, wonderful. So we have a question where, can you discuss the post-60 and the communication that's needed between the studio and payroll company?
So post-60s is a little different way. Are you talking post-60s IATSE or just post-60 residual formulas in general? Okay, so if I think I know what you're talking about, post 60s essentially. So post 60s is basically IATSE. You film something in, let's say, in California, it's going to trigger IATSE at 100%. If you film something, say, in New York, that's not a Western 13 United States, so that doesn't trigger the full IATSE amount. So what you can do is a proration. So that can actually be its whole other webinar in itself, which is quite detailed. So essentially, if you do have further questions, we will give you an email at the end of the presentation that you can actually send that to, and we can have a further discussion on.
Absolutely. So next question, could seasons within one series follow different rules?
Absolutely. And a great question, whoever asked this, because essentially just because the first initial season triggers a certain rule doesn't mean it's automatically grandfathered. Because once again, the production budget dictates all. So in my experience, I've actually seen series start out as a low budget where no residuals were triggered. And then it became successful. So now all the actors got paid more money, including director and writer. And so it went actually to a free window. And by the time it went to the third season, it actually went to high budget.
Alrighty, we have a follow-up question of what about calculating UBCP or ACTRA for SVOD?
Great question. So UBCP and ACTRA follow different rules. So essentially, they actually have what's called a buyout. So the way the buyout works is at the beginning of production, the producer actually gives them a monetary amount that is a buyout for a specific amount of markets. Now, recently, new media wasn't included, but now new media is. So I believe if you pay 115% of their initial compensation, you actually cover new media for the first 4 years. And then anything after 4 years, it's all the money you receive. So most likely, you're going to get your whole license paid out, and so you wouldn't have to pay anything for UBCP or ACTRA. But if you did a secondary sale to, say, a platform first was on Amazon and then went to Netflix, you could potentially have to pay. But in the forecasting of your initial costs, that wouldn't factor in.
Next question. Can you apply residual advances for series players?
Yes, absolutely. So what we didn't go over in this, because just wanted to keep it high level, is there is actually a part in the agreement, the SAG agreement, that if you pay over a certain amount, I believe it's $9,000, if their initial compensation is over $9,000, you can apply all money above that $9,000 as an advance for the residuals. Now, please note this only applies to series players, and it has to be spelled out in their contract. The guild will not validate it unless the specific amount of the advance is listed in the contract, as well as the season it's applied to, as well as to the talent.
So a follow-up, do other residuals apply to these series?
Yes, they do. So obviously we just talked about new media and it's released into a streaming world. Now, mind you, if we were to go onto iTunes and release this content, you would trigger a supplemental residual known as EST, and these are all paid at percentages of the money that you received, as well as if you release it to basic cable, pay TV, there's all sorts of amounts that you would owe. But please note with new media, certain new media residuals, you actually certain rules will grandfather and cover all new media exploitation. So be sure to read the appropriate guild agreements, or if you have further questions, feel free to email us after this presentation.
Okay, great. So it looks like we have another question here. It's, do the high budget SVOD yearly rates end at 13 years?
So as we discussed before, so the chart just showed 13 years because after 13 years, the rates actually flatten out and become locked at that last rate at 13. So essentially after year 13 for domestic, it would stay at 1.5% to forever. So 100 years from now, it'd still be 1.5%. And so essentially, when you forecast, you have to make sure after year 13 to account for any years. But typically, I've seen deals anywhere from 10 years to 20 years. So you could potentially in your forecast have to include 7 years at that one rate.
Okay. So Sarah wants to know, where can I find out more information about the over 9,000 SAG players can be considered in advance against residuals?
So Sarah, we will give you an email at the end of this presentation. If you email us, we can get you that language in the guild agreement. We'll actually just send you a PDF of the guild agreement and show you where that language is located at. And just as a follow-up, I just remembered the other thing that you want to list in the contract is what markets it's covering. So obviously, if you're making something for new media, you basically want to put that new media market right up at front so the guild knows it. It's something that the guilds kind of, in the past, they didn't really hold you to it, but now they're starting to just because they can claim you and actually make money off you.
All righty. So it looks like we've gotten through the questions, but we are happy to stick around if there's any additional questions you'd like to send through to answer. We'll just give ourselves a minute. Lots of great information, very insightful.
No, good questions. And just know, I mean, this is really a high-level presentation. The spirit was just to kind of get everyone's feet wet. But if you do want to know more, feel free to email us, and we can even set up a conference call, or we can actually do a live meeting at our beautiful offices in Burbank, California. We have here at EP, we have a staff of 95. And the one thing I'm proud of is that they are all eager and they want to learn about residuals. And just at a high level, I like to compare residuals to languages. And residuals is probably one of the hardest languages to know in the studio finance world, because like English, which is considered the hardest language in the world, is English has the most rules. But the one thing that makes the English language so hard is that every rule can be broken. And that's exactly the same as residuals. For every formula that we've talked about, you can actually go in and negotiate a side letter if the guild agrees to it. And that's the key word. You have to negotiate, and the guild has to sign off on it. So there are roughly about 400 residual formula combinations, but with all the side letters, we actually get into the thousands. So please note that, if you're doing residuals and you need expertise, please come to EP because we can shoulder that burden for you.
Okay. And it looks like we had a couple of questions regarding the slides. We will be providing that to the folks who have joined the webinar today, so we will be sending that via email. So just wanted to mention that, and thank you so much for joining us today. If there are no more questions, we hope you found this webinar insightful and beneficial, and we'll see you next time.
Yes, thank you, everyone. Have a good day.